In today's video, I want to teach you a 1-minute scalping strategy that is very easy and highly profitable. Just make sure you watch this video until the end so you won't miss any important points. Alright, as I said, this is a 1-minute scalping strategy. So here we set the chart time frame on 1 minute. This is the price chart of euro to US dollar, but no limitation on this, and you can use this trading strategy on any other asset or market. The only requirement is trading volume and liquidity, because this is a 1-minute scalping strategy and the profit and loss that we're going to take are very small in terms of price movement, so we don't want to experience any unreal price gap or large spread between bid and ask prices that can damage our trade entry, stop loss, and profit. Alright, for this strategy we must add 3 indicators. For adding them, here we click on indicators and we simply search their name. The first one that we want to add is Keltner channels, this one, which is a built-in indicator on TradingView platform, and we add 2 Keltner channels because in this strategy we need 2 and we need to adjust their settings. For the first Keltner channel, we don't change anything here in the inputs tab, and then here in the style tab we change the color of the upper band to red, and also for the lower band we change it to red, and then we remove the basis. And for the second Keltner channel, similarly we go to its settings, and here in the inputs tab for the multiplier we set it at 3, and then here in the style tab we remove the basis. Alright, and the third indicator that we want to add is called Smoothed Heikin Ashi. This one, Smoothed Heikin Ashi candles version 1, which is written by someone named Jack VMK. Alright, and for this indicator we must also change its settings. Here in the inputs tab, for both of them we set it at 11. Everything is already set on the chart, and let's see how we trade based on this 1-minute scalping strategy. This strategy is a volatility based strategy, and we try to catch increased volatility against the market movement after being overbought or oversold. So basically this strategy is a little more risky in compared to a trend following strategy, but it can provide you good trading opportunities to make some quick profit on the turning points of the market. As you can see, we have 2 Keltner channels on this chart, one with multiplier 2 and the other with multiplier 3, and this is actually considered an extreme level for the price. So this area is considered our overbought zone and this area is considered oversold zone. In times that the price is declining and it reaches to this oversold zone, we focus on our Smoothed Heikin Ashi candles. We wait until we get the first green candle. When this candle is closed and you see it green like what happened here, you must also check the candle of this price chart. It should not be an overbought zone. If it's an overbought zone, we don't enter any trade. Here for this case, you can see that it's not an overbought zone. So this trade is confirmed and we can enter a long position here as this new candle is opened. And as you can see, this trade is a profitable trade. Here you can see that the price went to overbought zone, telling us that there is probably weakness in the uptrend. So we focus on a Smoothed Heikin Ashi candles to see where it turns to red, which happened here. And this candle is also not in oversold zone, so we can enter a short position here as this new candle is opened. And this trade is also a profitable trade, as you can see. Moving on the chart, the price started going to oversold zone from here, so from around here we focus on the Smoothed Heikin Ashi candles to see where it turns to green, and you can see that the price continued its declining and giving us oversold signals up to here to this point where this price level were rejected and the price started turning to an uptrend. Here at this point we got the first green Heikin Ashi candle, and this candlestick is also not in overbought zone, so the trade is confirmed and we can enter a long position here as this new candle is opened. And this trade is also a profitable trade, as you can see. Moving on the chart, signals of overbought and Heikin Ashi candle turned to red here at this point. The candlestick also not in oversold zone, so this trade is also confirmed and we can enter a short position here as this new candle is opened. And as you can see, this trade is also a profitable trade. point where the price declined up to this point, and we continue like this. Please pay attention. As I mentioned earlier, in compared to a trend following strategy, this strategy is a little more risky because as you saw, we tried to catch increased volatility after being overbought or oversold, and unlike trend following strategies where we enter in the direction of the current trend, here in this strategy we don't care about the current trend and we are only focused on increased volatility, and the direction that we enter is against the prior direction. So here risk management is extremely important and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's a perfect choice for scalping. I have a complete guide on this. The link is also placed in the description of this video, and I highly recommend you to watch it because risk management is one of the most important factor in your success. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.